Hey everyone, and welcome back to the Your Money Your Life podcast, episode 165, where we dive into the deepest and most exciting topics when it relates to finance, personal finance, news, business, all of the above. So we are back at it again, episode 165. Before we get into the episode, make sure you share, like, subscribe the podcast episode. Make sure you write a 5-star review. And if you listen to this on YouTube or watching this on YouTube, you can subscribe and hit the notification bell so you know every time I am going live with the newest and most exciting news of the day. We always dive into the markets first and foremost, so let's do that. And the big thing that we're seeing this week, as we sit here, the markets have actually been trading considerably well over the past week, moving about 2.5% up to the upside, primarily driven by a couple of things. One, traders are now betting it's a 50-50 split between what they think the Fed will do in May, right? If they're going to raise another 25 basis points, the interest rate, or if they're going to pause meaning make no move, keep interest rates at the levels they're at right now, keep it at the rate it's at right now. And so traders are split on that now. And that's because some new data came out. New data regards to people filing for unemployment last week, the weekly jobless claims, it increased by 7,000 to 198,000. And that's adding hope to a lot of traders and investors that the Fed is gonna slow down its tightening campaign. And it's because they think that maybe the Fed sees that the labor market is cooling, right? So that's a big thing going on in the markets right now. You're seeing, again, cryptocurrency trade higher, getting close to the $30,000 mark on Bitcoin, which you're not even hearing people talk about, which is, I think, good. You don't want this hype and mania. You want normal, stable times in the market rather than this hype and mania that drives a lot of dislodged trading and betting, rather than sound gains over time, is which what we should have. And so that's the big thing. You still have the banking crisis in play. I think investors right now are okay with where the major banks have shaken out, and the ones that have failed. And so that's still down the pipe. Banks are in the near term for sure going to have to tighten credit lending standards, and they're going to have to tighten lending, which could have pressure on economic growth, right? So that's going to be a thing to see, especially in commercial real estate, all these different areas where a lot of loans are being applied. That's where you're going to see a lot of pressure as well. Even residential real estate, that's still been dropping steadily for the past 8 to 9 to 10 months, and still has more to go on the downside. So that's the big update for and news in regards to the market. Current update. We'll even show a weekly this week's trading chart. So let's share that screen and show that. So trading chart here, we're showing just for the week, a little bit at 2.26%. So this is the S&P 500. It's been trading fairly better. Again, on this news, you're seeing investors getting a little bit more comfortable with what's been going on. Now, in current events of the day, first and foremost, Twitter and all these different social media platforms keep making big overhaul and changes. Elon Musk announced that on April 15th, that if you were not subscribed to Twitter Blue, that you will no longer be recommended in For You tweets, as well as some other things. You won't be able to vote in polls and all these different things that will pretty much edge out anyone that's not subscribed to Twitter Blue. For those out there, I've been subscribed for over a year, for almost 2 years. I've subscribed based on affiliation to different companies. But now they're adding some different things in there. So, I mean, this stuff doesn't really matter to me. I think for maybe other people it does. I just, social media is just a gateway for people to, one, staying close to in contact with family and friends, and two, increase and amplify their businesses and what they're doing. So not a big deal in my world, but I think for a lot of people, it is a big deal, especially for people that have a lot of followers. And they have a cachet of a lot of followers, and then maybe a blue check, and that's like going to be gone. I think if you think down the future, I think the new cool thing will be to build a big platform, but just not have a blue check. I think they're going to go the other way now. It's going to be like, all right, it used to be cool to have the blue check, and now the people that don't have it, but we know it's them, they have a big platform, that's going to be the cool thing. So we'll see. We'll see that companies are trying to chase revenue. Meta is also doing the same thing with Instagram and adding a subscription blue check service as well. So a lot going on in their world. Let's look at, okay, this was kind of big news. So Apple announced their buy now, pay later platform. They launched it. So you know the Klarna, Afterpay, Affirm, all those buy now, pay later platforms. Apple has launched its long-awaited platform into the buy now, pay later space. It's capped at 1,000. It's into 4 payments over 6 weeks, and that's no interest. So it's no interest. And yeah, and they're trying to make a big play into the space of fintech. They've done it with Apple Card, all these different things, Apple Pay, and now they're in buy now, pay later, and it's going to affect the current people in the space. You know, the Klarna, the Afterpay. A lot of them moved down on the news that Apple's coming into space. Of course, it's going to, because Apple's a huge company, and so that's something to watch out for the future. And let's keep moving on to more of our news for the day. There was a lot going on. So I'm going to look into what I thought was more interesting versus not. In our most recent thing, I did see something that was quite interesting. Yes, more Elon Musk. I feel like I'm always talking about Elon Musk. There is an open letter from Elon Musk and 1,000 other tech titans. They're calling for developers to pause on AI experiments. So this petition has more than 1,000 AI experts and tech leaders. They've signed a petition warning that an artificial intelligence poses profound risk to society and humanity, and ask AI researchers to put their projects on ice for at least 6 months to gather more information before they foray into this deep dark hole of AI that everyone's scared about. Personally, my funny take is that could AI really harm us? I mean, just unplug the computer. If there's a bot that's talking to you, I'm just gonna close my laptop. Can it jump out of the laptop screen? That is my funny and opposition take on this, because I just don't fear a software code harming me. But there are a lot of issues with tech, and there are a lot of issues with AI for sure. If we're being serious, 100%. And these leaders seem to be pretty scared about it. The people that are really in the forefront of it seem to be really scared about what it could potentially do. So that's something to take into effect. But I don't know. I think it's something that with any technology, you have to see how it plays out first and foremost. But yeah, this is one that people are incredibly worried about, and we'll have to watch how this plays out over the long haul. But people are seemingly trying to figure out if this is something that's going to be very, very scary for consumers in the near term and the long term. So now we're shifting to more job talk. So one, as we talked about all the layoffs and different things that were happening, you've seen it shift from tech to Wall Street to Main Street. And one, if you're thinking about, okay, how do I survive in these times? One thing about, am I revenue generating for the company? Do I generate revenue? Do I make the company money? If so, that's a good thing. So then that's the yes on that mark. Then the other question after you get a yes for that, if you get a no for that, then you're going to be a little bit like, okay, how do I, make myself more valuable? If you get a yes for the question, then you're like, all right, is my operating margin for the company, meaning what I bring in versus what they pay me, is it better than the company average, right? So if the operating margin for the company is 20%, if what I do is 25%, then you are likely underpaid and you are likely very, very valuable, and they will probably never fire you. If you're under that, then you have to again go back to, how do I increase that operating margin for the firm, in a sense? How do I make more money than they're paying me and get above that company average operating margin? So it's a good way to think about it in the future. And now thinking about like just the job market in general, we've talked about how it's getting a little bit more tight. Folks are starting to, see that unemployment rate tick up, and will probably tick up over the next couple of months. But one area that's doing well is accountants. Accountants are commanding higher pay. In the face of accountant shortages that's been 2 decades in the making, companies are taking aggressive message to woo new recruits into the field. So accountants, think of your big 4 firms and some other ones. They are in heavy demand at this point, so they're raising pay. And they're trying to entice people to get into the field, because it is a quite boring field if you see it. And it's not that, like, for the hours they work, it's not that crazy as far as hourly pay or whatever they get paid. But they are trying to increase that, and increase 13% in 2022 and 21% through February of this year. So that's a pretty hefty increases. And so they're doing more in that access. And so you're going to see that demand supply effect here. If a job or something is in more demand, then of course it's going to demand higher pay if there's a short supply. And shifting gears here a little bit, is just talk about people exiting big cities, right? And that's happened for sure during the pandemic. A lot of people moved out of the big cities and moved into the suburbs. But they are showing that exodus is slowing down a little bit, right? So according to the Wall Street Journal analysis of census data, there is now been a slowdown of the big exodus from big cities. So while big cities, suburbs, and small and medium-sized metropolitan areas are still experiencing the most growth, more migrants move to large American cities, and there's more births occurring and fewer people dying. So that exodus out of those big cities is starting to happen, which is interesting. It's a kind of a preference thing, whether people want to be in big city or small, and where they kind of want to stay at. So interesting to watch, and something to keep your eye on those trends. In more news, ladies and gentlemen, we are going to shift to our question of the week. Two questions of the week, actually. One is more of just like talking at you and telling you what it is. So the question one was, in your state, what are the highest occupations? And I kind of skimmed them, and it doesn't go into business owners, which would be actually the highest, or people that run, their own business or do something of that nature. But it does go into more career and actually jobs. And the most that you would see was orthopedic surgeons, and cardiologists would be the highest earners in most states. So a lot of them were medically field related, right? And then the other ones happen to be like lawyers, physicists, chief executives means CEOs, sales engineers. So it's quite interesting looking at the highest in the state for people that are in career path mode. Another question, career-wise. Let's look at what are the 3 jobs that are projected to be the fastest growing over the next decade. The 3 jobs projected to be the fastest growing over the next decade. That answer happens to be nurse practitioners, wind turbine service technicians. That's an interesting one. I guess that's because we're using more energy in different ways, right? Wind turbine, okay, service technicians. And the third one is ushers, lobbies, attendants, and ticket takers. That's a surprising one to me. So those 3 projected to have the highest growth over the next decade. I wonder how they found that, but that's the source is the Bureau of Labor Statistics. And it's just telling me that, energy use is going to be interesting. Nurse practitioners, healthcare is going to play an important role over the next decade. And the last one is just telling me that people are going to want to do stuff, and leisure and hospitality is still going to play a major, major role over the next decade. So that's what it tells me. But what did it tell you? Let me know in the comments. Let me know by sending me a quick note. Folks, that is it for this week for episode 165. We will be doing this every week. We have more exciting stuff coming. For those that keep tuning in, we appreciate you for doing so. We'll talk next week.